Alright, live. Today's day 10. We're gonna see more about liquidity. Learn how to do the liquidity sweep. So let's see. It's been a couple days. I think it's been like 3 or 4 days since I've streamed or watched the video like this or read the Bible. So try to get back at it and see how far we can get this time.
Yo, what's good? Welcome to boot camp day fucking 10, I think, right? Yeah, I think day 10. So you guys know that last day that we talked about trading, we talked about liquidity, just kind of what it is and why we would want to use it in the market. So this is liquidity part 2, okay? And this is just going to be how to spot it in the market and where it lies within the market. And then finally, right, I want to take it like one step at a time so you guys can like have time to process and like understand what's going on. And then after all that goes down, then we will be able to get into how we can actually take trades off of it. And then if that doesn't make sense, don't worry, because we will have way more time to discuss strategy and actually executing on trades once we start learning more things. Okay, so today we're going to just talk about where it lies and then pairing that with, you know, why we want to know where it's at and also understanding it. And then from there, like it should be kind of self-explanatory as to how to take the trades, but we'll still discuss that in 2 days. So, right, let's do a quick little overview of what we talked about, why we want to use liquidity. Number one, that's where orders are going to be filled, right? That's where the banks are going to be moving the market. That's where they're going to be able to fill their orders and actually push market in whatever direction they would like to. Okay, and then again, how do they get these orders to be filled? They have to have people exiting the market, and then they also have to have people going in the opposite direction of them, right? Just like we said 2 days ago. It's an exchange. If they need to fill millions of orders, they need millions of orders to be going in the opposite direction. So that leads us into today's video talking about where liquidity lies. So where are all those people going to be going in the opposite direction of the banks and institutions? Okay, where and who is stupid enough to do this? Where is it happening? When is it happening? All that good stuff. Okay, so let's just talk about, right, basics. Remember when we talked about trends, how do trends move? Higher highs, higher lows, lower highs, lower lows. So it's safe to assume that traders, like retail traders, will see, oh, higher high, higher low, higher high, higher low. They see that it's trending, right? And they know that the trend is continuing when the high gets pushed above, right? Confirming that there's going to be a higher high. Right? So what most retail traders do, what most retail traders will do is they see, oh, higher high, higher low. Oh, they see that the high gets pushed above. They either have buy stops, which is literally just pending orders right above the high. So, right, the price point would be like right above here. And when that gets hit, boom, order gets executed, they get filled, okay? And they're assuming that price is going to continue in that trend, okay? Now, on the contrary, there's also stop loss orders right above these highs as well, right? Because there's people that are trying to short this down move, which isn't necessarily smart, right? You want to trade with the trend, which is what the people that are buying up here are trying to do. But there's also people who are shorting within here, right? And if we know, right, same thought process, right? When people are shorting, they know that their idea will be invalidated if price pushes above this high, right? So they would be exiting the market if this price point gets hit. Okay, hopefully you're starting to understand and see what I'm trying to get at with this. Is that when this high gets hit, when this high gets pushed above, people are getting out of the market and people are getting into the market, which is essentially creating liquidity for the potential for these banks and institutions to fill their orders to change market direction. And you're probably saying, well, TJR, if price pushes above a high and people get stopped out and then also people are buying, that means nobody won. Exactly. They literally liquidated all of those people, and they aren't right, because right when it pushes above, people buy, right? People are buying, and then boom, gets taken out. Their stop loss is right under here, right? The people that got stopped out, they get stopped out by a couple pips, and then boom, market moves in their favor. That's why trading is so difficult, because lots of people are trading like these retail or like just these basic ways to trade, and I mean, some people are successful with it, but I genuinely think that they're successful because of their experience in the market rather than the way that they're actually trading. And that's why I really like playing off of liquidity, and understanding that. So, right, we know that there are going to be stop losses above highs. We also know that there's going to be buy stops above highs. So that means, boom, when these highs get taken out in an uptrend, right, there's going to be people going long. There's also going to be stop losses above there, right? So when that happens, right, that gives the banks and hedge in these institutions the opportunity to fill their orders and then send market in whatever direction they want, which is usually to the downside. Now let's talk about it in the other direction, right, in a downtrend. It's the same thing, just vice versa, okay? When lows get taken out in a downtrend, people are going to have sell stops, right? They're going to have sell limits, sell stops down here, right? Because they know when a low gets taken out, odds are the trend will continue, okay? So, right, and we talked about during our trend session, or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend, because we are literally getting into the market. Hold up. I got my friends talking outside, so I gotta mute them out. But we are literally getting into the market at the beginning of a trend, and that's why we're able to catch these big moves, okay? So when we see that happening, okay, we take note of it, okay? So we know that underneath lows, there's going to be sell stops. And then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So, right, when that low gets taken out, okay, in a downtrend, people are getting liquidated. People are also going short, taking sell positions here. And then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidation and then allows market to fill those orders. Okay, so let's go into the chart and actually show examples of this now. And it's very, very easy. Literally jumps off the page. Look. Okay, uptrend. What's this? High. Boom. Sweep. Downtrend. Okay, we're not gonna get too analytical with it, and guys, this happens on every single time frame. Okay, right? Uptrend, sweep of the highs, collapse. Okay, this happens on every single time frame. Every single time frame. Ready?
The fuck does this guy say? Steve Durkel?
Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes up, big sell off. Dude, so easy, big sell off. What's this right here? What's this right here? Collapse. Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes up, big sell off. Dude, so easy, man. It's very, very easy. And it's like, you're going to be able to see this on every single time frame. So that's also what your homework's going to be, is literally just finding these situations where a high or low, a high or a low in whatever trend it's in, gets taken out, and then price rallies. Look, okay, ready? Want to see something crazy? Look at this. Low, low. You're probably saying, oh, no, it's just going down. Wait a second. Go to the monthly. Sweep. Liquidity got taken out. If we go to the yearly time frame, that is a massive liquidity sweep, right? What's market probably going to do? Probably going to reverse. And that also coincides with the US dollar being extremely weak right now. It's actually amazing how these markets move and how these markets work. Ready? And again, I don't want to get too deep into strategy, but this doesn't only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like find where market opens, or let's actually do it on like GU. Let's find let's find like, boom. Okay, this is Asian session. Okay, I don't want to get too deep into this because this is again, we just want to talk about liquidity and be able to spot it within the market. But as we can see, right, we have a mini downtrend, right? We break structure to the downside, take out these lows, rally, we break structure back to the upside, price pushes higher. Okay. Like we could find this type of shit on the 15-minute as well. Okay, and when you guys get good at it, when you guys get good at like spotting this, it should be like super easy to see and understand where this happens, right? It should just jump off the page. Boom, sweep, fall. Boom, sweep, fall. Let's try and find some to the upside. And the reason why I love this is literally, boom, sweep, rally. Dude, like when you guys start to see this stuff, like it literally jumps off the page. Sweep, rally, and then what does it do to the upside? Sweep, fall. It's how the market moves, you guys. The market is unable to actually move in the direction that it wants to without taking out liquidity to fill the orders. Okay, this is why I love the way that I trade, because it literally makes sense. You are not playing off of a floor getting bounced off of, or it's touching the ceiling so it's going to go down. No, we're actually understanding why the market is moving and when it wants to move in whatever direction. Like, this is literally going to be your homework. I don't really have much else to say on this video besides open up your chart and literally just go on. Okay, yeah, sure. We can literally just call it right here. Open up your chart. This is going to be your homework. Okay, open up your chart. Go on 3 different time frames and find 5 different liquidity sweeps on 3 different time frames. Okay, that's all you need to do. Okay, do it on whatever time frames you want. Daily, 4 hour, 1 hour, 1 minute, 5 minute, 15 minute, because you will see these happen time in and time out, bro. Like, look. Sweep, push. It's not accidental, and it's funny because like you could say like, oh, like you're just cherry picking. Like it's all over, bro. Trust me, when you guys do your homework, you will see that this shit is everywhere. Like it's very, very apparent, and it's super easy to see. You can even put it on the weekly, bro. Fall.
Somebody commented, "This ain't going to make you rich, homie. Start a business." I already have a business.
What happened right here? What happened right here on the monthly time frame? Oh, there's a monthly low. Sweep. What happened? Breaking structure to the upside on the weekly. Rally. It's not accidental, and it happens on every single fucking time frame. And guess what? Guess where we're at right now? On the monthly time frame, at a big high. This candle is yet to close. Okay, this candle is yet to close. It has 28 more days.
Bro, say what is your business? Heating and cooling.
My guess? Oh yeah. Oh yeah. We got some liquidity. And and just having some knowledge about the U.S. market and the U.S. economy in general, I wouldn't be surprised if we do the U.S. case big, and it happens on every single fucking time frame. And guess what? Guess where we're at right now? On the monthly time frame, at a big high. This candle is yet to close. Okay, this candle is yet to close. It has 28 more days. My guess? Oh yeah, we got some liquidity, and just having some knowledge about the U.S. market and the U.S. economy in general, I wouldn't be surprised if we do just down into the fucking pits. Okay, so that being said, now we know how to spot liquidity. We understand what it is, and then in 2 days we'll get into how we can take a trade. Okay, I don't want you guys to be like, I know liquidity, I'm gonna take trades, because it's not just liquidity. You need to know a lot more than just liquidity and break of structure to be able to form an actual bias and be able to take a actual high probability trade. But this is going to get you guys to the point where you guys can start spotting this on the chart. And there's a reason why we introduced this concept first, because it's the hard.
I want to take a picture of my note that I had with break of structure, and I want to favorite it before I lose it, because I was trading on just like a single strat with just break of structure alone. Oh, what the fuck, where is it? No, I had a picture of it. No, I had a picture of it. What the fuck? Damn, what the fuck? I literally had a picture of my... Oh. Hold on. Where's that note? Because I know I was taking a shitload of trades, just for fun. Oh, here we go. So the downtrend and the uptrend. This is what I was using to trade. It's my little note. Oh, fuck, I can't see. It might not make sense, whatever, but that's what I was using, and I was doing some pretty decent trades off of it. So I want to take a picture of that, just so I have it, because I know I'm gonna use it.
I just want to grasp on to be able to form an actual bias and be able to take a actual high probability trade. But this is going to get you guys to the point where you guys can start spotting this on the chart. And there's a reason why we introduced this concept first, because it's the hardest one to grasp. And it's the hardest one to grasp, but it's the most useful one to understand. Okay, so once you can understand liquidity in the market, it's wraps, bro. It is literally wraps. It is wraps. Okay, so with that being said, your homework: choose three different time frames. Find 5 examples on 3 different time frames. Okay, choose whatever pair you want. Right, it can be gold, GJ, GU, S&P. Doesn't matter. You will find liquidity sweeps no matter what. No matter what, I guarantee you, without a doubt in my mind. And if you can't, you're doing something wrong, because this isn't even like a come back to me and let me know if you can't. It's like you are literally doing something wrong if you can't spot this, because this is how I make money. This is how thousands of other traders make money, right? This is how ICT literally came up with this shit. Like, it works, and it is in the market, and it's how the market fucking moves. It's like, it is how the market moves, and I don't care what you say, it's nothing else. This is how orders flow. This is how the shit moves, and you can see it on the chart. So that's your homework, all right? Quick little day today, all right? Get your homework done. If anything, keep going a little bit harder, right? Make sure your motivation is up. We got a new week ahead of us, more things to learn, more things to strive for, all right? Let's keep it up. And for the people that have stayed with me this far, right, we're already past week 1, so now it's really just the disciplined ones staying in here. I know it's hard to keep up with a video every single day, but hopefully you guys have been able to do it. I appreciate you guys. I got friends out in the pool, and here I am making a YouTube video for you guys, so hopefully you guys can appreciate the time that I'm putting in for you. It really does mean a lot. I've been seeing numbers go up, and I love to see it. I love to see you guys learning, and I love to see you guys posting on TikTok, adding me on TikTok, adding me on Instagram. Love to see it. Makes me very happy, showing me that I'm making an impact on your guys' lives. So with that being said, I'll see you guys tomorrow. Peace out.
Oh shit. So that's it. Let's see what we could do with this. I want to go back though, and I want to get an example of liquidity sweep again.
Yo, what's good? Welcome to boot camp. GU. Let's find this is on like go on happens ready and only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like it's market probably something crazy.
Yeah,
Look at
so
this.
he went on the wick.
Low. You're
Yeah, he went on
probably
the wick.
Hey, no. It's just going down. Wait.
So it's going down, shooting up.
Wait a second. Go to the monthly. Sweep.
Went up, down, liquidity sweep. So let's see if we can find. I'm gonna do the homework on here. So we need. Let's do. He said 3 different time frames. Oh fuck. So we're on the weekly right now. Okay, maybe here's one right here. Here's a little liquidity sweep. If I'm not mistaken. It's a small one. That's a liquidity sweep. Yeah, look.
Liquidity got taken out. If we go to the yearly time frame, that
So the S&P 500. So let's do. One of them is going to be the week. So we got one. Here's one of them. Fuck off. Let's try to do a height. Pretty sure this is a liquidity sweep.
is a liquidity going down. High, boom, sweep, downtrend. Okay, uptrend. What's this? High.
I'm gonna take a couple pictures for to have as examples.
Boom, sweep, downtrend. Okay, we're not gonna get too analytical with it, and guys, this happens on every single time frame. Okay, right? Uptrend, sweep of the highs, collapse.
So we have a couple high ones. I want to see a low again.
Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500.
Fuck, this shit's been open for like a week.
What's
Probably
this right here?
drinking
This is on the
bullshit.
daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes
So how
up.
the fuck did he just see this one?
We have highs right here.
Highs right here.
Here, boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes up, big sell off. Dude, so easy, man. It's very, very easy, and it's you're going to be able to see this on every single time frame. And so that's also what your homework's going to be. Is
Okay. So these liquidity sweeps. I don't know if that counts as one or not. Try to look at some of my examples here. Trying to see. So he's on the 4-hour chart as well, looking at this. And from what I'm seeing, fuck it, let's try the 4-hour chart. Oh, what the fuck is going on here? I need to get rid of this fuck ass shit. Market opening closing times. So here, here's a liquidity sweep. Pretty sure. Maybe right here. Liquidity sweep. Boom, shoots up. Here's another one. Hits it. And then it pops up. What about the highs? Doesn't hit a high. Okay, so we're on 4 hours now. Could this be another one? Liquidity sweep and it shoots up. I'm gonna count that as one. Let's see here. This be considered a liquidity sweep? I don't know. There's a high. Look, I think this sweep liquidity. Boom. Look at this shit. What's going on over here? See, I don't know how to fucking. Would this be a liquidity sweep? Shoots up. I think that's a liquidity sweep. Yeah, look at this one here. Liquidity sweep. That's for sure a liquidity sweep. I'm seeing right here. It's gotta be. That's gonna be 5 for the 4 hour. Let's get off the 4 hour chart. Let's go look at gold now because we've been on S&P for too long. And we're gonna go on the week, which we're on right now. Let's see, liquidity sweep. Pretty sure I'm fucking seeing this, right?
Literally just finding these
Boom, boom.
situations where a high or low a high or a low in whatever trend it's in gets taken out, and then price
Whatever trend
rallies. Look,
it's in,
okay,
it
ready?
gets
Want to
taken out.
see something crazy? Look at this. Low,
So here's a low, shoots up, breaks it.
low. You're probably saying, oh, no, it's just going down. Wait a second. Go to the monthly. Sweep. Liquidity got taken.
Liquidity got taken. Liquidity got taken. Breaks whatever trend it's in. I don't know if I just used this. Whatever trend it's in. Goes up, down, boom. Let's try a different one. Uh, let's see. I'm gonna cut this short, review some shit, and I'm gonna pop back on.